Okay, I'm going to go ahead and get started. Right. Yeah, good morning, everybody, and welcome to this webinar. This is a special event. We have Henry Kaczmarczyk, who is an EdgeRater MVP. And Henry has written the most scripts out of anybody for the program and also has 3 templates in the system. And Henry will come on after I do a quick market review, and we'll do a presentation from there. But before we get started with that, I do want to just take a quick look at the market since we were here 2 weeks ago. The disclaimer, of course, trading is up to you, and we take no responsibility for any trades you make. Since the last time we were online, there is a couple of new things that happened. So I don't know if since last weekend, Yahoo discontinued their free data, and that caused massive disruptions in lots of trading programs. And so it seems that they are closing the door to free data. But for now, there is a workaround that's been implemented in EdgeRater. So you can still get Yahoo data. But yeah, I think over the course of months, that is going to dry up. And so look to other data sources rather than Yahoo. But for now, it's still working. And then the second new thing is that the market summary template was, I show that every time. And a lot of people ask, do you need to have HDSI for that template? Because it's using specific indexes that come from HDSI software. And then HDSI suddenly, they had an issue with their data provider that some of those indexes weren't coming through. And so we had to pare down the list of indexes in that template. So what I did was I went ahead and just created a brand new template that just uses market ETFs. And it pretty much gives you exactly the same report that we had before, but instead of needing to have HDSI indexes, it just uses ETFs, which are freely available from regular data sources. So you don't have to have HDSI now for this new market summary template. So Hindenburg, so have been looking at that recently because we've started to see a lot of Hindenburg omens. And since last week, this is a 10-year chart, and the red crosses are marking where the Hindenburgs have appeared. And as you see on the right-hand edge of the chart, we've got a bit of a cluster. So zooming in on that, looking for the whole year, 2024, we can see that actually coming out of this latest dip that occurred in the last 2 weeks, we have actually seen another 2 Hindenburg omens. And the thing about the Hindenburg omen is you never have a market correction without seeing the Hindenburg omens, but they don't always lead to a market correction. So it's just something to sort of pay attention to when you start seeing clusters of them. Like on the way up here, we saw 7 or 8, and then we had this sell-off. We saw a couple here coming out of this sell-off, and then we had this little dip over the last 2 weeks. So it's just something to be aware of. Hindenburgs, we've had a couple in the last 2 weeks. And here's the summary report of the markets using the ETFs. And so last time it was, I believe, the weekend of the Labor Day weekend. So the Friday, last trading day was the 30th of August. And at that point, we were in this line of green here with one yellow index, which was the Qs. And the market really at that point was at a peak. And I did say that volatility would be coming in probably on the day after Labor Day, and that did prove to be true. And we had everything turned yellow and then went into the red zone. And then in the last week, we've come out of the red zone into the yellow zone and turning green, slightly green again, but still not clear in the Qs and the IWM and the IJH. Looking at the buckets, this was where we were on the 30th of August, which was the last time we did the webinar. And we had a lot of stocks. 88% were above their mid-Bollinger Band, and 12% were below the mid-band. We had quite a lot of stocks, approximately 60%, that were in the 0.9 bucket, which is very high. So I called attention to that last time as a bit of a warning. But this is where we are as of Friday. So we're almost back up in terms of SPY level, the close price of SPY, to where we were on the 30th of August. But the distribution of stocks in their buckets has changed significantly. Only 60% are now above the mid band, 40% are below, and it's a much more even spread of stocks. Not everything is clustered into the upper Bollinger Bands. And here's what that looks like on a chart. I've got two auto trend lines drawn in here, this chart of SPY. And the trend lines, I've set the minimum length on the shorter ones to be 10 and the maximum length to be 100. And on the longer ones, I've set the minimum length to be 34 to match what they were last time. And they've changed significantly. So now it's picking out, whereas last August the 30th, the trend lines on the 34 minimum length, they were really trending up. But now they've picked out these two peaks that have occurred, and this last Friday as being significant, and the trend lines have now gone horizontal. There's the resistance line here, pretty much horizontal in the longer term, and a slight down trend in both the upper and lower trend lines on the shorter term. So yeah, we're back up to basically where we were at the last time we did the webinar, but things are looking a little bit different with the internals and the trend lines. This does indicate there's more of a resistance here. But again, we have to wait and see what is going to happen. The implied volatility last time we were at this level was a little bit lower than where we are now. So just a tad. So yeah, that's the quick review. And now I want to hand over to Henry. And Henry, as I said before, Henry's been a user of EdgeRater for many, many years. And we've had quite a few discussions over the years. Henry's written a lot of scripts, I think, in the HK scripts category in the library. In chart scripts, there's close to 1,000 scripts, quite a lot. And a lot of the work that I've done in EdgeRater to look at the script library and present that to make it available to everybody has had to take into account the vast number of scripts that Henry's written, because it used to be a bit slower reading that number of scripts, and so a lot of work's been gone in there to making that a lot more efficient. Anyway, Henry also has, in the user showcase category of templates in EdgeRater, he has 3 templates that he's written and shared with everybody very generously. And also he's been quite prolific in the forum and answering questions that people have with scripting. So, and I believe Henry is just an independent trader. He just does this for fun. He's not selling anything. He is very active in a trading group in where he lives in Florida. And so I'm happy to have Henry here to share some information. So without further ado, I'll hand over to Henry. Hi, Henry.
How are you? How are you doing, Chris?
Doing very well, thank you. How are you?
I'm doing great. Here in, well, cloudy Florida today. Don't look at the background because that's not my backyard. It's a
Yeah.
Zoom back. Anyways, let me start sharing a screen. This is my screen. Some of the things that you can do with EdgeRater, but just happens to be a template that I ran. But let me start out with a basic chart, and we'll just look at well, not that one. I'll come back and start with a clean layout, Control S, and a basic chart. Basic. Okay, so Okay, so this is a basic chart of the SPY. To me,
I'm
this
not sure we can see your chart. We can see the template, but not the chart.
okay, so new share. Basic chart. There we go. So a basic chart. This is
Yep, there we go.
what he gets to see. Doesn't matter whatever symbol you put in, it's a basic clean chart. Okay. Let's start out. We'll add a couple indicators in here. Again, HK scripts, but I'm just going to start out with something and I'll explain my philosophy and how I trade or what I look for in this chart. So let's look at the CCI. It's a basic indicator, nothing fancy about it. Some people who use it or whatever, they may think, okay, this is the greatest thing since sliced bread. And what you're looking for, this is the shaded areas are when it's above 100, shaded areas when it's below 100. And this line here at the 0 line is the line of demarcation, or it's the 0 line. So anything above the 0 line is bullish. Anything below the 0 line is bearish. And again, these show extreme areas of when it is. But take, for example, right here where the indicator crossed above 200. At this point of the chart, you're thinking, well, this is overly extreme. Maybe I should be a little cautious, and you're sitting there and okay. But overall, the chart has continued going up. This is at period length of 14, but it's still bullish. It went here, you had a little dip, and then it went back. And here's another area of bullishness. And again, another area of bearishness. Prices come down, bullishness, bullishness. You had your bearish period, and then another bullish area. So you may sit there and think, well, gee, that's the greatest thing since sliced bread. Well, how do you know that 14 is the right number? Unless you do back testing or whatever. So if I come in here and say, okay, well, let me add a couple more. I'll add a couple, whatever. We'll change the we'll change the parameters. On the second, we'll call it, instead of 14, I'll call it, make one for 28. And then this one, I'll make it for 30, say, call it 42. Just no particular reason, but I'm just looking at it. Okay, so now we see this guy, the long-term guy, he's been bullish from here, okay, to roughly here. He made a nice run up. The short-term guy is a little more choppy, but he's gone from here to there, you know, made a little trade from here. Here it was a little choppy, and then he made a nice trade through there. This guy turned around and said, okay, he made a nice trade. Now, if you were a single trader and this was the only indicator you used, you're getting whipsawed in and out, or whatever, and you're making trades or whatever. This guy, on the other hand, makes not in as early as you, but he stays a little long and doesn't get the top end of the trade. He ends up giving back a few trades. And this guy even is a little later and out a little later. And as a trader, I want to see more people or more participants in what they're doing. I'm sort of looking at the mob to try to see what they're doing. So all I'm interested in is not looking at the extremes here. I just want to see what's bullish and what's bearish in the market. So if I were to turn around and say, well, give me a indicator that draws a dot or a line or something whenever this indicator is above the 0 line. I can also tell it, draw me an indicator when it's above the 100 or the 200. I could sit there and do that. But for the most part, I just want to know what's bullish, what's bearish. And then the same thing, I could say, okay, instead of line 1, I want it on line 2. Tell me when this guy is above bullish and when he's bearish. And same thing with this. Draw another line. So what I designed or created was an indicator. And now I'll go back to HK scripts, which everybody has. I go into where it says Oracle. Oracle 20 and look for CCI. Oracle bands 20, CCI 3 through 60. I'll just click on it. Looks a little different, but you have to wear your sunglasses to this. They are colorful and bright, which stands out. And this starts out with the 3-period CCI, a 6-period CCI. They increase in increments of 3. And there's 20 of them. So this is 3. This is the 60-period CCI. So instead of trying to put all of these lined up all the way through, space on a chart to me is premium, but it still shows me exactly when they're bullish, when they're bearish. And the difference between these and this is that these are faster traders, these are investors. So traders versus investors when they're bullish, when they're bearish. And then I also added on a consensus little thing right here. So when it's bullish, it's light green. And when they're more bearish, it's a darker purple or dark red. Just something I could get back in on the trade here. I could get back in on a trade. I could get back in on a trade. Here it turned from short. I could get in on a short right there. Same thing right there was another short trade. Here it started going long. So that's how I designed these Oracle bands, whether they're called binary or rank. That's how I trade or created an indicator. Just something to look very quickly at. Some of the other ones that I end up doing. Let's find one here. Do I have it? Oh, I got so many of these, I drive myself crazy. Buttered. Oh, the other thing I wanted to mention, if you look at my list of stocks or indicators, there's a sign that says template. You don't really want to use that. You want to use the ones that are called bands or that. And then if you go to the top, you'll notice that there are ones that say event. Events are they're signals, and they're meant to use for your entries and exits tabs in EdgeRater to do system testing. So you don't really need to use those on a chart. It's nice to look at it and it'll just plot a little arrow as to when that event occurs on the chart. So that just gives you something. Another one that I use is rank, is a special formula that I was created to do it. But anyways, let's go in and look at a few other indicators as I add to these. And I'll just, you can see that there's a difference between trading these, which are choppy, versus these, which give me clarity as to when it's time to buy and when it's time to sell. I can do either way, trading on those. But here is, let's find one back with, oh, let me find one. For MA rank, if I find it. For MA rank. I should just go in and search, but I know where I'm looking for. Okay, right about here. For MA rank 10 butter. There's one of my favorites that I end up doing. And I'll just close this out for now. And I'll get rid of a couple indicators to add space. One more that I want to add in here. Ta-da. PL dots. The PL dots with ATR bands. And drag that there. Boom. Now we're cooking with gas. Okay, so first off, let me explain what PL dots are. And I'll zoom in a little bit. A PL dot was developed by Charles Drummond. If you've done any research on the internet, it's called Drummond geometry, Drummond. If you look at it, the course is now taken over by Ted Hearn. What the PL dot actually is the high, the low, and the close divided by 3. It's a 3-period simple moving average of that, and then it's offset by 1 bar to the right. Instead of being on the chart, it's actually over 1. And you could see that it's sort of pushing price up as it goes, and then all of a sudden, boom, it closes below it. Time to get out of the trade. And then it starts going and pushing the price down. And then it crosses back above here, and then it's time to go back long, get out of the trade, long here, go back up to the top of the trade. That's what the 3-period PL dot is. So if you were looking at a weekly chart and you want to compare weekly, daily to weekly, there are 5 bars in a week. So to look at the weekly one, you would have to multiply 3 times 5, which gives you 15, this is what it would look like on a weekly chart, where the price pushes up, stays bullish above that. So now let's go one step further, and let's add what the monthly bar would be. There are 4 weeks in a month. So 4 times 15, that's 60. This is your monthly PL dot. Okay. And then what I did over here is I added an average true range band at multiples off of this 60. So I added up here, I subtracted down here. And what these bands do is they tell me extreme areas. When prices start getting a little hairy and out of whack. And then I did one more thing. I decided to color in areas when they're bearish, and when they're bullish, they're a little lighter. I tend to use lighter colors for bullish moves, darker to give me a warning sign. Warning, danger, Mr. Robinson, it's time to get out of a stock. Here it crossed above, came up. Now, if I sat back and I'm sitting there thinking, okay, let's take a good look at this, you could see that for the most part, the S&P 500 has been bullish from here got a little extreme up here, a mild pullback, a test, another drop, more of a significant drop. And then we started down here getting close to a lower extreme where it crossed above. We had a bullish move here, another nice bullish move there, a pullback, a nice bullish move, a pullback up, and again, now we're starting again with another bullish move. So let's see how these compare with my mob mentality of 20 traders. This happens to be 10 different traders. Again, the way I write these, the faster ones are at the bottom, the slower ones are at the top. And the other thing that I wanted to make note for people is that you'll notice with all moving averages, these tend to slide at an angle, okay? You see how they turn at an angle? All moving averages, and for most part, most indicators are going to be like that. What those angles are is called lag. All indicators, or mostly ones that are in charting programs, have lag in it. They're a little late getting into the trade, 1 or 2 bars. They're a little late getting out of an indicator by 1 or 2 bars. And depending on the length, you may have actually missed quite a bit of the move. And you might get out way too far late in the move, giving back some or most of your profits on that trade. And there's only one way to really get, or there's only really one way that I find to I can't say eliminate, or to deal with lag. And the way to do that is, if you're in a movie theater and you want to make sure you get to the concession stand and make sure that you have enough popcorn or whatever, you have to cut the line. You have to get in front of the guy in front of you. So this guy is the slowest trader. He has to get in front of this guy and in front of that, in front of that. So obviously he can't take his signal, but when he notices all of these investors or traders in here starting to get into it, getting hot, that's when he should start his trade. On the same hand, when he wants to get out, instead of waiting here to get out, he gets out earlier when he sees faster traders getting out of the market. The other thing that you could look at is you had pullbacks, but then you have opportunities to get back in on a continuation trade. Right there. Right there. Right there. So you could actually get in on trades if you know how to run these indicators. And you could see that this indicator had a group of traders that started here. Same with that right there. Here was a group. They all got in. Nice little trades on that. So that's how I end up using it. These are sort of consensus bars. You could say, well, yes, the consensus is bullish. I'll take a trade, stay with it, time to get out, and stuff like that. So that's one of the ways that I use the trades on that. So if I sit back and you're going to say, well, gee, Henry, I still like to see something a little more traditional. Okay, so let's go look at stochastics. No, gotta kind of go to. I'm going to go in and look under slow stochastics under here. Find slow. Yes, yes, yes. Okay, so here it is. HK slow stochastics painted and DW. Okay. This is another version of it, but it's got 3 stochastics. This one only has 2. I'll click on that. And let me take that up a couple notches. Bam. And I'll explain that one with you. This is the 10-period slow stochastic with a 3-period signal line. Okay. This dark blue one is the 50-period. So the 10 is what would be on a daily chart. The 50 is what would look like on a weekly chart. So obviously everybody says, well, you know, when the stochastic falls below the 20 and then it crosses, that's a buy signal. Okay, I'll give you that. But then there's also times it crosses and it doesn't. It just keeps falling and falling and falling. And why is because it hasn't fallen far enough. So when your long-term stochastic is actually below the 20 and your fast one is below the 20 and crosses, that is a more stable and probable entry point. And it got here. This one hasn't quite gotten there. And then this one started to pull back. That was a quick exit. Why? Because it's getting in a, let's put it, it hit short-term resistance. And then it pulled back down. Again, here's another entry point. And this time, it's gone up and above, and it's carried a nice, long, continuous trend. And the fact that the long-term stochastic has followed along above the 80 all the time. And every time your short-term guy sells off, he turns and changes his mind and gets back in the trade, sells off, comes back, decides I want to get back in the trade. Your long-term guy has been in it all along. And you can see that the 15-period PL dot at the same time has been trading, and price has been above the 15 all that time. So really, these are just re-entry signals for you to get back in on a trade. And your mob mentality with other indicators are all bullish, and they show you the same time. Get in here, matches up, got back in. Here, there, get back in. So you can see, and then all of a sudden, you're starting seeing more. You're overbought. This guy's selling off. These guys are selling off. These guys are selling off. Time to take profit and get out of the trade. Made another attempt. Here was another entry point. Nice continuation trade. These guys decided, well, I'm a little been in the trade long enough, and it's time to take profit, and out we go. So that's how I trade on a lot of things. I've created several indicators. I find it to be a safer way to trade. I make it so that I can see it. I have a saying, even Ray Charles can trade off my charts. So that's it. That's how I trade. And I not only use ATR bands. Let me take this one off. I end up using Bollinger bands. And there's another way that I use Bollinger bands. Dual area Bollinger bands with speed lines. Okay. Draw that up. I hit the wrong one here. Let me go back to slow stochastics. Slow stochastic. Drag that back. So now this one, I want to take out the ATR. ATR bands. Okay, so let me explain slow Bollinger band, dual Bollinger bands. Again, I look for areas of extremism. And what is extremism using Bollinger bands? The yellow ones are 20-period Bollinger bands. Okay. This is the 20-period simple moving average. These are speed lines. The blue bands are 60-period Bollinger bands. So what I end up doing is I end up coloring when the 20-period gets above the 60-period Bollinger bands. That's a little area that sort of concerns me. It tells me that price is a little bit extreme. You might start seeing some sort of pullback in. Again, right here, it didn't happen. It got above here where price has gotten above the 20 and the 60. And you ended up seeing that eventually it went sideways back to the 20-period middle band and continued. Here it got a little extreme, went sideways to the 20 and continued its move up. Again, this area, it showed it got into this area. It was going to pull back sideways. Again, right here, it went a little extreme, went sideways. Finally, it sells off. So I find Bollinger bands to be areas that I could use. The 20 period is what most people use. If you go and you say, well, there's, I want to see what a 3-month quarterly one is, 3 times 20 is 60. That's how I got the 60 period Bollinger bands. Just something to show me. Nice long trend above the 20 all the way up, showing me areas when to get in and out. Whereas I have areas coming down and time to get out. That's how I do that. The next thing, I gave you a template. Let me find it. I'll go back to this. I have 3 templates over here that I provided. It's called HK% PL under the reports viewer. I ran it. I ran this against the CBO weeklies list. Let me show you what they actually end up doing. One of the things that I ended up doing, it tells me whether it's bullish or bearish, or bullish versus bearish. And then this is the signal when this turned bullish to bearish. So if it's a -1, it's bearish. 1 is a bullish move. This is the 3-period PL dot. So when it crosses, it tells me it's that one is there. And then again, I told you that they go in increments of 3. They go from 3 to the 60, which would be the red line on a chart. So what I want to really find how to do it really quickly, what I end up doing, so what I might start doing is I say I want to find stocks that are greater than or equal to, say, 5. Why? I'll make it even. I like $10 stocks. All of a sudden, I eliminated a bunch. I come in here under volume. I go number volume. I want to make sure that the stocks that I trade have traded at least 500,000 shares. I don't like penny stocks or stocks that are illiquid. So I've eliminated, okay, so I only eliminated 26, 27 stocks. But here's where the fun part gets in. I want to know when the 3 period starts crossing. Okay, so I go under here. I eliminate the neutral and the negative ones. And I want to find, all of a sudden I've clicked out a few clicks. I'm down to 34 stocks. So yes, this is the 3 period, the short term 3, but I want to see when it also meets up with the middle band or whatever, call it the 15 PL dot. So if I'm the same thing, I just go to the 15, undo that. Now I'm down to 8 stocks, and I could look at those 8 stocks very quickly, and I'll just show you how they do it. Zoom in a little, zoom out, bring that over. One of the things, Ian Woodward was one of the mentors to Chris. He he developed HGSI software. And one of his things was that he, in the market summary, if it's above 70 is a bullish area, below 30 is a bearish. The 2 areas in between tend to be sort of neutral. And again, if you're above the 20, you're in the 50% range. If you're below it, it's bearish, and you're going to have a pullback. So out of those stocks that I had picked out, let's look at Bristol Myers Squibb. Again, I'm looking for the 3 and the 6, which is close. You can see that this is trading here. I don't have a lot of support in this one yet. I don't have any bullishness tendencies here. The percent B is starting to perk up. This 2 period RSI guppy is, the consensus is starting to turn bullish. I'll explain this indicator in a minute, but that has possibilities. Etsy, you could see where it crossed above. I might be interested in Etsy, and that will continue. And this one, this indicator has shown, okay, there it is. A lot of them have turned. There's a signal. Etsy would be on my watch list. Coca-Cola starting to point up, pointing up. Hasn't turned on this one, just getting a little turn up here. I would put that on a watch list to buy it above there, above that high. Las Vegas Sands. They got some of my money. I'm trying to get it back. Would I be buying it? Probably not right now. I would probably be looking to get into this later on in the week, although it did start turning bullish here. Again, this would be sort of a bracket trade. I would have to buy it above the high, protect myself with a low, and if it did go the other way, I would short it going down below that low and put a protective stop above the high, depending on which way that breaks on Monday. This is Novavax. This is an interesting play. Again, I've gotten bullishness here, bullish consensus. Would take that trade and look for it to go at least probably to 1611, probably start turning up. This is Uber. A gap up. Starting to see a little bit there and a little bit there. Would probably be looking at Uber. United Health. Again, you could see how it's gone up, trading above the 20, going there. So again, and then this VF Corporation, Vanity Fair, I think it used to be, but again, pulled down and it's going up. This is looking like it's going to continue going up. It's got long-term momentum going, pointing up. Your 20 is sort of pointing up, looking like it's going. So yeah, that's how I would do it. And just for an example, I want to show you what this indicator is. It's two RSIs. If you take the 10 and you either subtract or divide the 40, you would get a line. And when the 10 crosses above that, it would be bullish. And when it crosses the 40, it would be bearish. On the same hand, if you did the 40 versus the 120, when they turn bullish, the 40 goes above the 20, that would be bullish. When it goes below that, it would be bearish. And this is all different guppy averages, the 3, the 5, the 8, 10, 12, 15, whatever. And the subsequent higher RSI is 4 times that guppy length. So you can see that the fast turns here versus the slow right here. So I really don't need that, but this is just to give you an idea of what this indicator does. But that's it. That's how I do it. And if anybody has any questions, I'll start taking questions.
Yeah, if anyone has a question, just type it in the chat. We'll monitor that. There's one question so far from Ross, and it's just asking about there are so many scripts available. How how do you learn what the script is telling you?
Okay.
Yeah. So
here's I'll show them that question. So obviously you come in here under HK scripts. Okay. Let's pick something easy to learn. Not my scripts, HK scripts. So let's go to, I did it the wrong way. I want that way. Let's go adjustable bands. So you click on that and you go to the pencil. It's going to give you this. It's a system file. Just click OK. It's going to bring up the designer, the script designer. Everybody can see the script designer. This is the code. And the reason I call it reference high is because I'm referencing it. I'm taking the high and I call it a look back. How far back do I want it to go? Same thing with the low. This is an old script from Advanced Get. eSignal has Advanced Get indicators. But I'm looking at the reference high of that high, and then I do a moving average of it, and then I color it whatever, and then I fill in the area of what it is. And just to show you what it does on the chart, it just draws bands on it. So you could see that the bands, you're buying above the band, you're selling below the band. Just something that is, you could put on a chart, simple moving average. If you come down here, say, I want to get one of the things that I found to be useful when I started charting. You see these little insert buttons, method or script. If you click on it, this puts everything that you want in order of how to do a script. It has basic data that you can put in. Premium data, you can look at time and date, your reference functions, how you want to put it, if you want to make bar count or whatever, math functions, indicator functions. You can put in seasonality, whatever you can put in there. Or you can sit there and say, well, I want to put in a script of something else. Whatever is in there, whether it's my systems or if you wanted to put in formula scans, George Lee, you can put in candlesticks, and you can even put in, let me find them, under options. You can actually come back down all the way down through here and find, I guess it's under here, under system. Again, you could put in just about anything that you want to look at, and you could put them in there, system scans or whatever, system indicators. And that's how that works. And once you do that, you give it another name of whatever you want. You come in and file, save, it'll compile it. And if it's correct, it'll calculate and populate your list. If you get an error message, it'll tell you that you have an error and you need to correct it. It won't compile unless it's in a correct format. So that's how I do it. And that's it.
Yeah. A couple more questions. So Tom is asking what resources you've used to learn how to write scripts.
Okay. So, I'll give you a little background on what I am. I'm a retired bus driver. I drove a transit bus for 31 years. And you're going to sit back and say, well, what do you know about trading? Well, in those 31 years of driving, I've gotten probably 3 million miles that I've sat on a bus. And in that 3 million miles, I've seen a lot of red lights, green lights, and yellow caution lights. So I can see a stoplight. I could see when the green light, obviously when the light changes from red to green, you step on the gas. When it's been green for a while, you may want to sit there and wait and slow down a little bit and wait for a caution light because you know it's going to be a red light soon. So how did I get to there? I'm as greedy as the next guy, even more greedy. I found out about my retirement plans at a very early age, and I wanted to figure out how to make a better retirement for me when I was getting older. I came into money, or I earned enough money to start up a brokerage account. At the time, I was looking at the IBD, Investors Business Daily. I would scour through that newspaper religiously on my breaks, looking to make trades. I had gotten some success in trading, but I said I was always looking and I was always missing a trade. In the paper, they had ads for Metastock software. They also had it for TradeStation, which was there. And I sat back and I said, well, gee, let me look into, if I invest in Metastock, I could use their software. So I got into Metastock and I learned how to use their formula language to create indicators on charts. Metastock was good, but they had a limit with only 20 variables per formula, which wasn't so good. I ended up trading with TD Ameritrade. They ended up getting Thinkorswim. I learned how to code in Thinkorswim. Chris came along with EdgeRater. I saw his program. I was intrigued by being able to show events on a chart clearer. I was able to go back. I enjoyed the system testing and looking at where trading systems were. And then I learned how to code with EdgeRater. And that I've read all kinds of books from all kinds of traders. I have a library of probably 500 books on trading. I learned how these traders coded, and I implemented it, and I just kept coding and coding. And if the shoe don't fit, or let's put it this way, if the gloves don't fit, you must have quit. If I found an indicator that I didn't like, I'd go on to the next one and try something else. And I kept coding and coding and coding until something finally clicked and said, something, value investing seems, buying stocks at value or selling at extremes or buying at extremes seems to work for me. And that's how I do it. Any other questions?
Very good. Stan says, I know you run a Zoom meeting each week. Do you teach this information at that meeting?
I try. I try to explain how I do it. I try to get into different things, different topics. If someone has a idea of what they want to trade, I'll give me just give me the idea, give me a week to figure it out, and I'll present it the following week. I have no problem showing how I trade, just different ways of doing it.
Yeah. Okay, any other questions? Anybody else have the questions? Okay.
Okay.
How about so with your what list of stocks do you normally trade from?
I run my scans on a group of ETFs, and because some of my templates are I have a template that has 70 systems on it, and if I run it on a too large of a list, it takes a while to compile. So I run it on the CBO weeklies. I run it on about 600 stocks. At least I know that those stocks have traded options. I'm not looking for penny stocks. I'm looking for something that can trade I use ETFs to find out which way the market is going. And I try to go top down from there, see
Yeah.
what's moving.
Do you use the CBOE weeklies list, but do you actually trade the options or do you just purely trade stocks?
I pretty much trade stocks. I'd like to get more into options. Uh, it's just that I like to play golf and I'm not at the computer most of the time.
Yes, very good. And then Tom says in the template that you showed, you had FinViz, had a link to FinViz
Yes,
data. Yeah.
let me show it. Uh, Actually, Chris was the one who I came up with the idea, and Chris actually let me share a screen of the template. Okay, uh, so I have FinViz here. This was also one of the Zoom group that I belong to in Florida. They used to put out an ETF report, and they were able to go in and click on a chart. It was just an Excel spreadsheet, and so that people in the group could just click on whether it was FinViz or Yahoo, and they would be able to get a chart. But FinViz does a lot more. So if I just clicked on FinViz, it's going to open up a chart in it's going to open up a FinViz chart of Coca-Cola. Now it doesn't give me the same quality of indicators that I have in EdgeRater, but it does give me a lot of fundamental analysis that I can do quickly on a chart. Gives me all the news. It gives me more fundamental data. And then it also gives me when and where, if it's a stock, when they're selling or whatever. I just wish it would just give me a time when Nancy Pelosi is buying or selling the stock, but that's what I do. And
Yeah.
it was something that it's just something that helps me trade a little faster. Or put it this way, it gives me more information to look up the stock.
So when you do your scans, run your templates, and you're looking for symbols to trade, do you pay attention to the fundamentals on FinViz?
Uh, I do look at some of the fundamentals, but I am like I've showed, uh, I'm a momentum trader. As a trader or an investor, we're all looking for momentum and we're all chasing the same dot. So when I have three indicators flashing that they're bullish, that's for me time to step in. I will look at different stocks. I look at where they are in the bands. I look at where they are between the ATR bands. I look at where they are between the stochastics. And when I do find that, it's time to step in and make the trade. And then once I make the trade, I monitor it to see how it's going. It doesn't go too far against me or where I might be looking to take profit.
Would you categorize yourself as a swing trader? What's your do you have various lengths that for different portfolios or mainly what do
No,
you do?
I'm again, I'm a retiree. I look for stocks that go about 3 to 4 weeks, maybe 5. Uh, when the indicators turn negative or bearish against me, it's time to get out, move on to the next trade. Look for something that's stable and safe.
And is
I
there ever a time when you just say nothing's looking good, I'm just going to step away for a few weeks?
That is the hardest thing for a trader to do, is to sit on his hands. If you learn to sit on your hands and not do anything, I always had a saying before that if you're a trader, you should have a dog. And it's your job to turn on the computer. It's the dog's job to bite you if you try to touch the keyboard.
Wise words. Okay, so a question from me. So Ross is asking the new US market summary ETF template that's located in the Pro Tools category. You find it in there. You can add it to your favorites. And Kevin says, thanks for sharing. Very impressive list of scripts and information. Thanks again. Yeah, I mean, really, really awesome. And I really want to thank you for coming on to the webinar and showing this information. You've given so much to the EdgeRater community already, and it's great to, actually get to see your face and listen to you talk and hear some, hear how you use those indicators and where they came from. That's great.
I'll have to send Chris my new script file and replace the old one with new ones, the indicators that I'm using. Always looking for ideas.
Yeah, that will be coming. So yeah, so Henry has been working since the last HK scripts came in on making some fixes and adding new ones, and so that that whole bunch of information will appear in the program in the next week or so, I would imagine. And then Tom's asking, can anyone join your Zoom meetings, or is that a private thing for your group?
I'll give you my email address. It's henry1224@yahoo.com. You can contact me through that. If you're looking to join my Zoom meetings, send me an email. And when it's time, we meet on a Friday at 12 o'clock. And we discuss stocks and whatever comes along. It normally lasts about an hour and a half to 2 hours, and hopefully you'll enjoy it.
Yeah, very good. That's very good. Great. Okay, well, thank you very much.
Hey, thanks. And keep up the good work, Chris. I enjoy EdgeRater. It's one of my favorite programs.
Thank you. Thank you very much. Yeah, that's it. So thanks, everybody. And we'll call it here, and we'll see you next time. And if anybody has any other information that suddenly comes to light that you want to find out more information from Henry, send me an email. I can forward it to Henry, or he gave you his email address as well, but he might not want to be spammed with lots of questions. You can always send them to me, and I can relay them to Henry. So that's great. All right. Thanks, everybody. Bye for now.